Welcome to Chronos Talks, a place for some candid thoughts on the worlds of sustainable finance and corporate sustainability. I'm Gemma James, I'm Head of Biodiversity and Nature at Chronos Sustainability, and today we're talking responsible mining with our CEO, Rory Sullivan, and our special guest, Adam Matthews, who's the Chief Responsible Investment Officer at the Church of England's Pension Board and also the Chair of the Global Investor Commission on Mining 2030. So welcome both.
Hi, Gemma.
Thank you, Gemma. Good to be here.
So today we're talking and focusing on the mining sector, and specifically we want to discuss Mining 2030 and all of the activities of the multi-stakeholder commission that has been working together for the past 3 years. We're probably at a point in time where mining is in the limelight. There's this race for critical minerals and securing supply chains. And I would say there's finally a recognition that mining is an industry that actually supports many value chains which society depends on. It's very much a sector that is known for its negative impacts because of the nature of its operations and the legacy that has been left. It rarely gets any credit from outside of the sector for the positive contributions. But we can also say that the sector has evolved over the years. It has its challenges, but it's also improved in different areas and it's made progress in many areas too. So, Adam, we are dealing with quite a complex sector. We'd say that it's not easy to navigate the sector all the time. So why don't we start with you to set the scene? Do you want to tell us why are we talking about mining? Why is it so important to us and investors? And what was the commission set up to do?
Well, I've just come back from the African Mining Indaba, which is the main annual gathering of the governments and the mining industry and investors in the industry in Africa. And they all convene in South Africa. And in a few days, I'm off to PDAC, which is the equivalent in Canada, which is like an enormous gathering in North America. And it's interesting, like there was a very powerful presentation at the beginning of the Mining Indaba where it basically challenged the notion of critical minerals, because a lot of us are looking at critical minerals and we recognise, particularly in the West, the narrative of they're absolutely essential for the energy transition, for technology, for batteries, for AI, or for defence industries. And absolutely they are. And there's a race to secure a lot of the supply of those minerals. So that's why there's this sudden geopolitical focus from a number of countries in the West to secure those supply lines, and particularly acknowledging a large part of the market has been very effectively developed and processed by China. And so there's a group of countries that are really trying to sort of secure their supplies against that dominant market position that China's established over decades. But then you had the African governments presenting, well, okay, we understand that these critical minerals are important to these technologies in your countries. At the same time, critical minerals to us are fertilizers for agriculture. Critical minerals are a raft of other metals that we need for rural development objectives. And yet often you're finding those are being extracted in Africa, exported, value added outside of Africa, and then re-imported at an inflated cost to their economies and actually a burden on their potential economic development. And so it was a really good challenge right up front, and it was done through a very eloquent video that really sort of had a vision for African development, the importance of mining related to that, but at the same time acknowledging that you've got multiple sort of demands and who's critical is slightly different, and actually deriving some of the way that investors are responding to it and the need for it. So I just wanted to put that context that somebody's critical mineral may be quite different dependent on where you sit in the world. And at the same time, how do we as responsible institutional investors relate to that? Often it's been through a prism that this is a sector that, as you said, is challenging. It's a sector that when something goes wrong, it can cause international headlines. It can be something you're having to engage with through stewardship, and some it leads to disinvestment and exclusion. And that's historically, I think, one of the ways that a large part of the investor community have responded to it. And yet we absolutely need this sector. We need the minerals, whether it's because of those technologies that we need to aid us in the transition, or whether it's just for basic development and production of food. And so really understanding our role as investors related to this sector has been the sort of underlying need that we've tried to address through the Commission, and ultimately recognising we need to play a very different role. if mining is to meet that demand, whether it's for African development, whether it's for European technology or defense industries, it needs us to play a different role. And that's why we've set out a 10-year vision that recognizes we need to be at the wheel for 10 years, working very constructively, making a series of interventions, and recognizing the importance that we really work to ensure that this can be the best sector it can be, a rules-based mining industry, delivering value in country where the resources are, and ensuring that those supply chains are secured.
And I think it's worth noting for this is that a lot of that analysis that you've just put out in terms of the role of investors was actually published in a landscape report by Mining 2030 back in 2024. So that's actually on the Mining 2030 website if anyone wants to have a look at that. Can you tell us a bit more then about where you landed in terms of those vision and recommendations that you started to beginning to outline? What are the activities around there and what does the next steps around those vision and recommendations look like?
The first thing is to encourage people to look at the Mining 2030 website, because it's very effectively laid out there in the document we've produced and we've consulted on now. We've just concluded the consultation and there's been a really strong endorsement of the 10-year vision and the goals that we've set out. And we're working now on a detailed implementation plan. But at headline, it really is a mining industry that can meet the global demand by operating to high performance standards, avoiding and minimizing harm and leaving a lasting value for communities, and also ensuring that it meets that global demand picture as well. And underpinning that, we've identified 7 goals which recognise the importance of investors at the heart of this, the way that we invest, the way that we incentivise the sector, the way we understand it, the different filters that we have on whether it's on our portfolio or whether it's the way that we understand which companies are genuinely seeking to be the best they can be, and we relate that to the debt that they're able to access, through to the expectations that we have of the mining companies themselves, the sectors that they're dependent on, but also the other issues that we need to see addressed that really can aid the sector to move forward. And that includes looking at legacy issues, where you've got something there that challenges investment because of the history of mines that may have no owner today, that have passed through multiple owners and actually pose environmental or social challenges in where they've been left, and there's no real means to be able to address them. We've set out a series of recommendations around how you address that challenge. Or whether you look at the relationship with conflicts. Minerals can be a driver of conflict, they can be a sustainer of conflict, and in a world which is becoming increasingly sort of fractured, as Mark Carney has suggested, you've got to really sort of understand that dynamic. And actually, we've identified ways in which we think investors can sort of both play a constructive role and equally work with companies and other financial actors to potentially incentivize minerals to actually be a driver of economic flourishing and peace. So it's a pretty holistic, I've given a very quick summary there. There's a real recognition of the need for a rules-based mining industry, and one that we feel also needs to see structures like an international minerals agency that can bring a lot of the sort of the good governance practice really supported in regulation in many countries. So there's a lot of detail sitting behind this, and it benefited from a broad set of multi-stakeholder inputs. And I think it's really important we had voices of workers, we had voices from impacted communities, indigenous communities, as well as the industry and experts from academia, and a broad set of technical inputs as well that sort of enabled us to land on this vision, goals and detailed recommendations.
There's a couple of points in there. So I'll come to the investor bit in a minute, and maybe we can bring Rory into the conversation on that. And then obviously this multi-stakeholder piece and the collaboration required for this kind of initiative. But you've also mentioned some pretty hefty recommendations that the Commission have made. So you've talked about an IMA. There is the recommendation for a global peace building centre. There's a legacy fund in there. These are really big institutions and types of frameworks to get off the ground. Where are you optimistic about getting these into operational mode, and where do you see that you're going to come up against some challenges and barriers?
Well, I think we've been really thoughtful in identifying where there's interventions or approaches or steps that can be taken that are directly within the remit and responsibility of investors. And a lot of that is around the way that we understand the sector, the way that we invest in it, the way that we can incentivize it differently, and the kind of tools that need to be created that could enable us to potentially play a different role. So those are the areas that are directly in our purview, and really ensuring that we can bring those tools into existence. I'm highly confident we're going to be able to do that. A very detailed TPI, an investor mining performance framework that I think will be important in enabling investors to sort of deliver on that part of the vision. So I'm highly confident on that. In terms of some of the structures that we've suggested around an international minerals agency, I think that's one of those areas where we've, as investors, have looked at the landscape, the variety of initiatives out there. There's some really good ones that exist today, but a feeling that there needs to be something that brings them all together much more effectively than there currently is, and that there is a gap. And with all the focus on this sector, we felt that an international minerals agency, an equivalent to the International Energy Agency, could really play a very important role. I do think, though, that's the kind of thing where we as investors are saying this is something that needs to be governmentally led. We're acknowledging that there's a gap. We feel that there's a really important structural need here. We're recommending this as something that we would like to see governments bring into existence, and we'll be champions of that. We think we can be beneficiaries of it because we think an independent entity like that, that's tracking demand, tracking supply, looking at illegal mineral flows, and also potentially supporting the investor mining performance framework, that really, I think, will strengthen governance across the sector. But ultimately, that needs to be governmentally led, and we've been in discussion with governments around that. I'm pretty confident that you're going to see some governments that are looking to take that particular proposal forward. On the Global Centre for Peace Building, that was a recognition, as I said, that there's this relationship with conflict. It affects the whole sector, whether companies are directly involved in a particular conflict or not. Just that sort of sector-wide view is impacted by the fact that you have a perceived higher risk related to minerals. And the opportunity there was to have a dedicated capacity that can really enable effective dialogue, bringing in companies that are around a particular conflict, bringing investors and other financial actors, and really thinking through, well, what are the ways that we could incentivize an alternate path to the current trajectory of a conflict? And ultimately, how do you ensure that that doesn't happen? And I'm delighted to say that that's the first proposal that's already been acted upon. And we've managed to launch the Global Centre for Peace Building in Cape Town just on the eve of the mining in Indaba. And that centre now is being put into operation under the presidency of the Archbishop of Cape Town. And you'll be seeing a lot more news around that commission in due course, but it's already started working in a couple of conflict environments. So overall, I'm pretty sure that over the next 10 years, and it is a 10-year vision, you'll see all of these being brought into play as appropriate.
So I think congratulations on getting the launch of the Global Peace Building Centre up and running. I think a lot of the investors will be really keen to see what comes out of that and what's useful for them in their day-to-day as well. Thinking about the role of investors, so Adam actually started previously talking about, there's a set of recommendations around investors, and it's all around unlocking capital into the mining industry and developing a different type of relationship with the industry. Given, Rory, what Adam described at the very beginning around the current relationship with the industry, what do you see are going to be the bigger challenges in terms of implementing some of these recommendations from now on?
I think there are two distinct challenges that the vision recommendations are designed to address. So the first is the one around the disconnects in time frames between the different types of capital and the mining life cycle. So investors looking at the sector or as individual investments have to end up thinking about price volatility or commodity price volatility. Inevitably, when there's price volatility on the downside, there's a pressure on companies to cut costs. There is, I think, a risk aversion both amongst companies and investors on the use of new technologies, for example, on tailings management and non-water-based systems for managing tailings. And I think the investor timeframes and time horizons, even for investors who self-identify as long-term, tend to be relatively short, typically 3, 5, 7 years, compared to the 20, 30, 50-year timeframes that mines operate for and then are decommissioned over. So one says the problems relate to disconnects in the timeframes and how that affects decision making. The other, Gemma, I think you foreshadowed many of them in your opening remarks, which is that there are also a set of perceptions, some of which are grounded in reality and some of which are perceptions of investors around the mining industry. And those include volatility, They include the perception of overinvestment at the wrong points in the cycle. Something the industry is very blind to is collective reputational effects, how the poor performance by one actor affects the industry as a whole. And I think the industry has had a history of negative impacts on the environment and human rights, which have sort of made investors less willing to accept the argument that the industry can be a responsible long-term actor in society. So essentially we have two groups of problems in my mind. One are the timeframes and disconnects between investors and companies, and the second are views of perception or opinions or rhetoric and how the actions of individual actors affect the collective. Then just maybe, but of course, easy to diagnose the problems. I think what is interesting about Mining 2030 is that many of the recommendations which Adam has outlined are explicitly designed to address these problems. So the very first one is that Mining 2030 is seen as at least a 10-year intervention. So it is designed to at least align expectations and start thinking about that over time. Many of the Mining 2030 recommendations are around consistency of expectations. I think the mining industry has received mixed messages from investors around the importance of social and environmental performance. And I think Mining 2030 is designed to provide a coherence and alignment of expectations. I think that also plays into the case for a level playing field. Companies have sometimes felt that having high standards of performance makes them less competitive or less attractive to investors. And I think, again, the recommendations are designed to address that. The role of public policy and of structured institutions like the International Minerals Agency and the Centre for Peacebuilding are part of how we build policy and institutional frameworks that consolidate expectations. And then I think two issues that I would see as being particularly relevant to investors is, one is this is a collective endeavour. Mining 2030 is not a set of visions and recommendations. Mining 2030 is a consistency of message from institutional investors to the industry around expectations. And I think the other part, which is one of the priorities for the next sort of round of work within Mining 2030, is to also move on from this not just being about risk management, but also around the role of investors supporting enabling companies in innovation, be that technological innovation, which helps reduce health and safety risk, helps reduce impact, and also understanding the role that mining plays in contributing to positive, healthy and functioning societies and economies. So the ambition is great, but I'd say to your question, Gemma, there's a very clear diagnosis, and from the diagnosis there are a set of very significant and coherent contributions investors can make to allowing us to make progress, which is back to the vision and recommendations that Adam outlined.
So you just triggered a thought, Rory, which is the Commission issued a survey in partnership with GlobeScan to the mining industry, for the mining industry to express their views around, what's the perception of their relationship with investors. You've mentioned quite a few issues that actually came out in those results, but one of the findings from that was that companies were feeling like that despite having good sustainability performance, that wasn't necessarily valued by investors. They don't see it in share prices, or they don't necessarily see it through capital allocation. I mean, the question for both of you, which of these recommendations, or how do you think these recommendations would actually help with addressing that issue? And maybe that's sort of at a more holistic scale, and that's what the Commission is trying to do, full stop. But is there anything specific or tangible in terms of actions that you could see addressing that?
Gemma, I think there are two immediate responses to that. So one is, I think, consistency of expectations. I think investors have simply, they've mentioned social responsibility and CSR and all those things. I don't think that is translated into a consistency and a coherence of message. So that's point one. Just let's simplify what's being asked for and be consistent. I think the second is, personally, I think investors do an utterly terrible job of explaining to companies how sustainability related factors play through in their investment decisions. I think companies are looking for this silver bullet, and investors don't explain how responsibility helps minimize risk, helps minimize disruption of social license to operate, helps minimize risk of conflict, helps minimize liability, etc. So I think that if investors were clear about where and how these factors are considered, and some are avoided risk and some are things that perhaps, sort of are more positive for share price. But I think one of the reasons the mining industry complains about investors is that the industry has a set of overhang issues which investors are discounting. And I think as investors, we could probably do much more just to explain, if you manage these individually and collectively, the investment industry as a whole is more likely to re-rate the industry and to move it forward. So I would say be consistent and be much clearer about sort of how poor practices negatively affect the industry, because I think that's the big overhang at the moment.
I totally agree. Particularly on the consolidation point, the message was so clear from the survey results that proliferation of investor demands, initiatives, engagements just confuses companies. It makes it very difficult to sort of get a real sort of consistent approach from companies in response to that. And it just dilutes investor impact, quite frankly. And so I think the Commission provides a basis upon which there's a consolidated set of expectations that I would invite all investors to consider supporting now. The stewardship initiative that will flow from this will be a very clear way in which you'll be able to identify yourself with those expectations, advance them in your own individual stewardship, as well as within the Mining 2030 stewardship initiative that will emerge, and also really sort of ensure that we remain disciplined amongst ourselves, where people start to sort of proliferate into a particular issue. Look, there's a framework here, there's a basis upon which we can do this in a much more effective way that really ensures that that perspective from investors is constructively heard, engaged with and responded to. I think the other thing is really that we need much better tools. I think the Commission looked at the way that often the industry suffers from the fact that you have a range of investor products, data points that often don't really understand the sector well. They don't have enough nuance. And as a result, you find that leads some to exclude, to underweight or penalise the sector. And actually, we need the complete opposite. We need to lean in. We need to invest in this sector. It needs a lot of investment, but it also needs to have the confidence in boardrooms that investors aren't looking at a short-term return, that ultimately we're incentivising, rewarding, enabling companies to make long-term investment decisions to be able to provide the minerals that are needed, as I say, whether that's for African development or European development or development in Asia. So I think really ensuring that we create those tools and challenge the sort of, I would venture, relatively negative and often I would say unrepresentative data sources that don't fairly reflect the nuance of the sector. And there, I think the investor mining performance framework is going to be really important. I think that as a transparent tool, which is one of the recommendations, will create an enhanced way for investors to understand whether it's the mine site or the company at the corporate level and sit above a whole heap of existing standards. It won't recreate, it won't duplicate, but it will really reinforce, support and enable investors to roll in behind companies that are willing to make progress and that continuous improvement that we want to see. And one of the messages from the Commission is the need to sort of recognise what companies are, not where we sort of hope them to be, actually where they are, support that they can be ambitions to really sort of see continuous improvement, and a tool like that can then be plugged in that can support stewardship, but it could also be linked to debt products. It could also be linked to indices. We're actively looking in our fund. We had our investment committee yesterday, and as a result of the recommendations of the Commission, we were discussing how, in effect, the Commission's proposals de-risk investing in the mining sector and enables us to begin to look at it quite differently. And equally, we've looked at where we have existing filters in investment products that actually we want to now remove. And we want to do actual potential increased weightings onto mining through different vehicles that we're potentially going to be considering as part of our future investment approach. So that is just one example where I think you're going to see that sort of real positive intersection with the sector.
And that's a really good example to see how tangible actually these recommendations then play through into an actual investor decision-making process. You know, we're not just talking high-level conceptual things here. We're talking about actual changes in behaviour. But it also sounds like, you know, we're not just talking about institutional investors as individual organisations changing. We also need the financial infrastructure around what the investors are relying on and those tools in order to change as well, in order for them to use it and help facilitate with that. So I'm just going to change tact a little bit. So Whilst this is an investor agenda, it's been really clear, Adam, that, investors cannot do this alone. This has very much been a multi-stakeholder approach. And to implement any of these recommendations, we really need that to be quite collaborative. The Commission did bring together quite a varied group of stakeholders, as you've pointed out. What would you say have been the challenges and benefits of having that multi-stakeholder approach? It's not always easy to get consensus amongst such a diverse group of stakeholders.
I think it's been a tribute to the way in which that diverse group has really come at this. And I think it reflects the importance of the issues at hand, and equally credit to all the individuals, which represented, as you say, a broad set of stakeholders from trade union, from communities, impacted communities, to indigenous voices, to academia, etc., and corporate voices. You had a real sort of convergence of those different perspectives alongside very different investors, from major debt providers through to equity investors through to private markets investors, all looking at what is the role we potentially could play here. Have we understood the role of investors in their different forms related to the sector? And then how can we draw from this broad set of perspectives into a cohesive set of recommendations? And the fact that I think we landed where we have is indicative of the work that went in from a lot of the individuals and organisations there. At the same time, it isn't easy, and I don't think it was ever intended to be easy. And because I think what we're discussing has real world impact on whether it's at the community level, whether it's at the corporate boardroom level, or at the country level, because of the nature of the subject at hand. And there are some areas where we weren't able to complete our work, and we've identified them quite clearly as areas that we need to see further work on. And I think we've sort of identified them quite clearly in the report, and we think that those do need further reflection to be able to get to a point where there's perhaps the kind of consensus perspective that we've been able to land on in other areas. But I think if you're going to look at any sector, whether it's mining, whether it's agricultural or whatever, you need to look at the broad set of stakeholders that touch that sector to be able to really sort of have a credible process that can take account of the different perspectives, recognizing that you're not always going to agree, but actually there are going to be areas where you can find that consensus. And where there aren't, well, that means that you're going to need to continue to have processes that have that dialogue that will continue thereafter. So yeah, I would say that it's been a welcome process. I do think that we had some very clear input from companies, but I also recognise what we've set out isn't going to land well with all companies, because like investors, there is a diverse group of companies. There are huge, very well-known companies, very public names, through to small, medium operators. And what we've set out is an agenda that's going to require companies to work with investors. And I do think that there's going to be real benefit for those companies that move, that genuinely want to see responsible investment as their raison d'etre. I think they have an enormous opportunity here. But I recognise some companies aren't in that space. And therefore, what we're proposing isn't something that lands necessarily where they want to be. But this is a clear signal of where I would say the institutional investor community is going.
You've said it hasn't been an easy process. Rory, Chronos was the Secretariat for Mining 2030. You've been through it, the process from the very beginning, and it's definitely had its moments, and I can vouch for that. I mean, reflecting on the role of the Secretariat, what do you see as the key success factors and the lessons learned from running this type of initiative, given the scale of it and also the complexity of the mining industry itself?
Gemma, I should really be asking you this question, given that you did most of the work, but I would happily jump in. Mm-hmm. I think the first thing is that you're right, and I think Adam's comments also reaffirm this is probably as complex a project as we've ever done. We're dealing with geopolitical issues, highly significant sectors, very strong industry bodies, massive social environmental issues, very, very complex stakeholder relationships, all against a backdrop of relationships that have been damaged and compromised over the years. So as a secretariat stepping in, trying to enable what Adam has correctly described as a highly ambitious agenda, and dealing with a group of stakeholders whose needs and interests and expectations are quite different. My main takeaway is the importance of a good process and of running a secretariat process in as professional a manner as possible. I then think there are three elements to that I would see as particularly important. And Adam, I'd be interested perhaps if you wanted to come in then on, are these the features that enabled you to deliver on your objectives? But I think the first is doing high quality work. As you know, Gemma, we had to analyse the industry, analyse its impacts, analyse underlying causes, diagnose the contribution of different stakeholders. So that pointed to really high quality research and having a really rigorous and logical diagnosis that then pointed to interventions or actions. So I think conclusion one is the secret of success is high quality work that can stand up to scrutiny from a whole range of stakeholders and a whole range of perspectives. I think the second is to both enable conversations and listen to feedback. I mean, Adam, your role in many ways was to lead. Our role was to listen, gather feedback, show that we were listening, and help translate or ensure that you were aware of stakeholder perspectives. And also, I think one of our challenges in dealing with you and the investors was also making sure that we could communicate who investors are, what they're thinking of, why they want to do this back. So I think we had a really important role as an interlocutor between the commission and stakeholders, because the volume of stakeholders was such that you couldn't do it. The Secretariat had to do it. And that meant we had to proactively kind of catalyse discussions, enable them, facilitate them, and ensure the communications in both directions were clear. And the third is we had to provide a lot of momentum behind the process. You know, we had to make sure, the research process kept going, the conversations were facilitated, that we as the Secretariat and the Commission responded to feedback, that we were communicating with the media, etc. And I think there was a sort of an obligation on us. When I say to maintain momentum, we had to be quite relentless in doing this. As you know, Adam, we had weekly calls with long action lists and making sure momentum was maintained. You steered, but we had to deliver it. And I think that willingness to be relentless and to drive something through in a difficult, complex issue was really important. So I think they're my reflections in terms of what made this work. It's high quality work that could stand up to any scrutiny, being a trusted interlocutor, crossing between the actors, and being relentless and on top of all of the detail, which is, of course, a tribute to Gemma, Seven, the rest of the team.
Well, you summarised it well, and I do pay tribute to the Secretariat, as I know, and many of the Commission members as well, who've always acknowledged that there's been a reliable and a very diligent entity that's been providing the Secretariat. And it's not always easy, because I think the job of a Secretariat is to ensure that the process runs smoothly, be receptive to all the perspectives, acknowledging that not all of them are going to be convergent. But can you run a good process? Is it credible? Is it transparent? And is there good research underpinning it? The other thing for me is that there's some real lessons for wider institutional investors' approaches to how we really look at our relationship with sectors. We've looked at the sector as a whole. We've recognised that there's a broad spectrum of companies and a broad set of ways in which we're invested and that we have relationships with the mining sector. But I think that there's a real lesson here that we could replicate a number of the lessons that we've learnt here into the way that we could approach other sectors. And I would challenge the Principles for Responsible Investment to really think about, is this a replicable model where investors, yes, I think it's important that they can be asset owner led, but it's really involving institutional investors across the spectrum, take a long-term view as to a particular sector, its challenges, the opportunities for us to address those challenges and therefore de-risk those aspects, and for us to really reflect on the investment opportunities that can then arise and the role that we can play in ensuring that it is a sector that operates to the best of the international standards relevant to it, but at the same time it delivers the ultimate long-term returns that we need to fulfill our legal duties. And my sense is that there is a model here that can be replicated, having the multi-stakeholder independence inputs from a broad set of actors that have deep understanding of the sector, but often from very different perspectives, converged into kind of a commission model underpinned with a resourced secretariat that can actually ensure good process, but at the same time that you have a wider group of investors that walk along that process with you, that are supported to be consulted, engaged with as you get to it, but that you don't end at the end of this with a nice report with good pictures and all of that, but actually a very practical implementation plan that ultimately has a timeline and a set of realistic expectations that can be ambitious, but have a realistic opportunity to be delivered. And I think that for me is the lesson that I think is transferable. And as I say, I would challenge PRI to really reflect, and investors who ultimately are PRI, to really think, is there a chance that we could take this, replicated into 5 or 10 other sectors, and have this as one of the ways that a PRI on its 20th anniversary is supporting genuine long-term institutional investors in value generation, in navigating the difficult issues for a sector, and providing us with an opportunity to do it in a much more effective and long-term perspective.
That's a great point, Adam. And we've definitely seen some interest from other investors around, what does a commission for another sector actually look like? So thinking through the diagnosis, the stakeholders, what does the landscape look like? And then thinking through quite differently how investors might use the levers that they have to play with. I think one thing I wanted to just end on is that I think with the vision and recommendations, we ended up with very clear messaging around what the Commission is trying to do in terms of attempting to unlock that capital for the mining industry and for investors to support and facilitate that industry moving forward in a very positive manner. So I think just to wrap up, it'd be good to hear actually from both of you, what's your call to action now for investors to drive the adoption of those vision and recommendations? What would you like to see next?
I'm extremely excited at the opportunity we've had to present the recommendations both to President Lula and half of his cabinet, as well as to the South African government. I've got further engagement with other governments. There's genuine interest from mineral-rich countries, as well as countries that really need the minerals from those mineral-rich countries, to work with institutional investors in that vision of a rules-based mining sector. But I want it to be practical. And I think some of the implementation plan that we will now be bringing forward will have a vehicle through which we are rolling up our sleeves, taking the recommendations, identifying which of those are directly in the purview of investors as set out, and setting out a plan to bring them into reality, and others where we are looking at how do we practically work with industry to unlock the financing needs to ensure that you have got the new mines coming online in line with the vision, practical examples where you can see those delivered in the not too distant future, and the wider investment ecosystem that's needed to support that. Because it's not just about the mine, it's around the infrastructure around it. It's also about the regulatory, the tax structures and the incentives around that all together. And I think that there's an opportunity with governments in a number of countries, with institutional investors, and equally the demand side countries, to start to work very practically. And I think the Commission provides the impetus to start to develop that rules-based mining vision into practical realities, and I think you'll see that come into existence. We've also seen the Global Centre for Peacebuilding launched. That provides a vehicle for investors where you have a relationship with those companies potentially operating in conflict environments to get involved in some of the dialogue processes that centre will be overseeing. And I would say in legacy as well, there's something there that investors can support in addressing one of the real anchor issues that anchors the social licence. So I would invite any investor that is thinking about the mining sector to think further about it and really get involved in the implementation phase. There's an investor support group, there'll be a steering committee, and there'll be enormous opportunities to collaborate and to engage constructively in what I would say is a deeply exciting sector, hugely impactful and relevant. And I think you'll see tangible example of real world impact through your involvement in that.
For me, one of the most significant contributions or innovations of the Mining 2030 work and its contribution was actually surveying companies on what they saw of investors and the role investors could play. So this Mining 2030 is not investors saying to companies you need to do A, B and C. I think it is investors, as Adam's outlined, identifying areas where they can support, enable and drive progress. So I think my takeaway beyond the points I made earlier is that investors need to explain where and how they take account of sustainability related issues when they look at the mining industry, because I think at the moment the industry sees a lot of you should coming from the investment community and very little we are doing. So the kinds of actions Adam talked about, on engagement, on supporting investments in legacy, on supporting innovation, I think investors also need to step up and say, this is what we're doing, this is our contribution, because I think otherwise you end up with something that looks like finger pointing, whereas one of the starting and perhaps the fundamental premise for Mining 2030 was how do investors work with the mining industry to deliver a more sustainable industry, and working with implies both sides taking action and explaining what they're doing. So I think there's a challenge for investors on saying what they're doing and explaining how the industry's performance on these issues affects investment decision making.
Great. So some really clear actions then for investors to take. Thank you both so much for the discussion. It's been wonderful having you both here.
Thank you, Gemma.
Thank you, Gemma.
And for our listeners, do keep an eye out from further activity from Mining 2030 and do contact us at the Secretariat if you're interested in joining the Investor Supporter Group or would like a more in-depth role. For more episodes of Chronos Talks or to follow Chronos news and updates, please follow us on LinkedIn via the handle @Chronos Sustainability or check out our website chronossustainability.com. Thanks for listening.